That's right, folks. I keep on cranking them out. I don't stop with the videos. I hope you're excited. We're talking about the earnings reports to watch for the week of May 2nd, 2022, this next week coming up. I hope you're excited. Plenty of great companies. I hope you're hyped for this, because I know I am. Look, we're in a rough time in the market, and we need quality, solid earnings in order to get back where we need to be. So let's take a peek and see what we got. So we're starting Monday before open with a little bit of a semiconductor company known as onsemi. Definitely an industry that's been getting what I would describe as hit pretty hard, really, for the past 4 years. Let's just be clear. Semiconductor stocks have been so cyclical, and all we've heard is negativity for a while now. It's entirely a guidance type thing for this company. Guidance will set the stock on its way. Let's just be clear. Berkshire Hathaway, obviously super important, because we got to know what positions Mr. Warren Buffett, as in his associates who do all the trading nowadays, what they're in and what they're out of this quarter. That's massive. That alone has a massive impact on what stocks are going up and down, just by them saying they bought more of this, which, let's be clear, I'm going to guess they bought more Apple, as you should. But yeah, that's an important one. Berkshire Hathaway, you got to look at it every single year. Enterprise Products Partners, Six Flags. There could be some great things for Six Flags coming ahead. You've seen great news for experiences. People are excited. They're ready to get out and have fun. But Six Flags, it's been a bummer for sure. But we might have some good stuff, okay? Global Payments. BlackRock Capital again. Look at the positions. That's the most important part of these companies. Obviously, the investment income is pretty massive too. But we don't expect those numbers to be great given the market conditions. We don't expect them to have great return. I mean, it's just kind of how it is. Saia Freight. You love Saia. Great company. Yeah, I mean, I don't know. It's a great company. And they're delivering like crazy despite some constraints that they're finding. Park Hotels and Resorts and Saragon. And then after close, we have Devon. I knew a guy named Devon once. Okay, folks. Mosaic, Avis Budget Group, Expedia, a little bit of an interesting play. Again, as I talked about experiences, I've never once used Expedia, so I'm not familiar with the platform. I thought this was a thing in the past and it's died out, but I guess it hasn't. But, everyone's benefiting from these experiences, folks. People are booking everything. Cruises, flights, they're excited to get out of the house. They want to have a great time this summer. They really do. This is the first summer that they're going to be doing that. And you won't necessarily see this impact fully quite yet, I guess, for these companies for this quarter, but the following quarter should be pretty darn nice. Nutrien following them, NXP, Diamondback Energy. MGM Resorts is one that, again, I'll pile into that. You see some great things out of MGM Resorts here as people are doing more traveling, especially when you talk about Las Vegas. It's popping over there in Las Vegas, so I really do like MGM Resorts here. We've got the Clorox Company and Chegg. Chegg should be closer towards the top of the list, if I'm being honest. This is a quality company. But a little bit of, I guess we could say there are headwinds at this point. Not hailwinds, those are head and tailwinds. But just a little bit of headwinds when we talk about, I guess, less online schooling. Now, it is still a factor, folks. It is still a factor for some people. That's one thing that you see a lot of with some of these school districts is if there's any sort of hint of weather, they might just go to a online schooling day. And Chegg is helpful for that because some people, they don't learn well by themselves, right? They need something, some sort of assistance. They don't stay focused and just read a book, okay? So Chegg's helpful for that. And they've been doing pretty consistent growth on the user base, so excited to see what those numbers look like. Tuesday before open, we have Communist Pfizer. Sorry, I can't say that. It is going to be curious to see what it looks like now that they're The government's not paying them billions of dollars for their vaccine, but they are getting paid for the booster shot still. But once that runs out, I don't like Pfizer personally. I don't see what it's going to do for you, because at some point people aren't going to be getting 90 booster shots, unfortunately. There could be an annual, but again, it's not going to be everyone getting that, and they're not going to be getting billions of dollars from the government, hands in the pockets of the politicians, folks, okay? Just throwing that one out there. BP and Marathon, we've got these oil companies. Last week we saw from Chevron, as well as ExxonMobil, we saw their earnings. Exxon beat on a revenue standpoint, but both companies missed on a profitability standpoint. Could be more in play here when you talk about Marathon and BP potentially. I would expect similar numbers. It's hard to predict these things right now. Again, we see rising oil prices, and that hurts them as well as the consumer. So, I mean, just keep that in mind. Hilton, oh yeah, experiences, baby. I'm excited. I'm excited for these experiences stocks. It's time for the resurgence. Teva, Biogen, Estee Lauder companies, MPLX, AGCO, and Westlake Chemical. I don't like my lakes having chemicals in them. They're turning the frogs gay. I don't know if you heard that one, but they are. I mean, it's just the truth. Westlake Chemical's doing it, folks. After close, we have our first focus stock in AMD. And why is it? Because AMD's been getting shellacked lately. The stock's down massively this year so far. Expected an EPS line of 91 cents versus 52 cents of a year ago. Massive numbers if that's the case. I mean, a lot of companies are struggling right now on this profitability line. If they're able to do this, despite supply chain constraints, that's all they ever say, is the excuse for everything. But if they post that line, I'll be pretty impressed if they hit on a profitability standpoint. I don't necessarily know what that looks like. It's so uncertain right now that it's hard to predict that. But from revenue standpoint, expected $5.52 billion compared to $3.44 billion of a year ago. I feel relatively confident in this aspect. Now, I will consider we look at a very tough comp when you look at the gaming segment. And we're seeing video game sales fall, technically now, finally year over year, after 2 years of massive growth. That does hurt, in essence, AMD as well. I mean, this could have an impact on them, seeing as their chips are put in many a console and many a computer. But look, AMD, I still like it. If you're talking about 50+% growth, this company's trading dirt cheap right now, and it deserves a little bit better. Airbnb, decent platform. Again, we talk about experiences. I prefer an Airbnb to staying in a garbagey hotel. That is pleasurable in that aspect, but again, there's negativity there too. Seeing as the stock got massively boosted by the last couple of years, any tech companies are just going bonkers. But Airbnb, look, I like the service, I do. Not necessarily like the stock. I think it's too inconsistent for me. Starbucks. We're going to see really good numbers out of Starbucks. I'm just being 100% honest. I think the numbers are going to be darn good for Starbucks. I don't know on a profitability standpoint. I can't point to that one. But the revenue, I feel pretty good about comp sales for Starbucks. I really do. Skyworks Solution, I also would expect great numbers out of Skyworks. We saw great numbers from Apple in terms of iPhone sales. We saw fantastic numbers from Qualcomm last week. I expect Skyworks to fall in line with that as we see their chips in high demand. I mean, I think it's going to be great stuff. Oniyok. I don't know. Lyft. Again, I'm not going to talk much about Lyft. It's not a company I'm a huge fan of, especially given even current environments. I don't like it a lot. Some people are going to be completely out of Lyft for the long term, given that they don't want to be in a confined space with a stranger. It's just kind of how it is. It's not necessarily the right platform for everything, and we still have taxis rolling around. It's kind of crazy that taxis still exist with Lyft and Uber, but they do. Yeah, I mean, I don't love Lyft here. Okay, that's all I can tell you. A10, not my favorite steak sauce. If you take down 9, I would prefer that steak sauce. If you take 9 away from that, but Matson, Match Group, we have heard some rumors here that Match Group could be an acquisition target from Meta platforms, otherwise known as Facebook. So keep that in mind. I'm curious if they'll discuss that on these earnings. If they discuss if they've been in contact with potential buyers, they won't say anyone by name probably, but there's a chance there. Okay. Caesars Entertainment, obviously it's not Caesars, it's Caesars. That's just what he was named. Okay. So I don't know. I like things. Caesar's Rewards. We're all Caesars, baby. Little Caesars, not part of this company though. Eats a pizza. I could be the spokesperson. Before open Wednesday, we have Moderna, another one of these companies that's been getting money out the wazoo from the government. Once that runs out, again, I don't love the stocks, and they haven't really been trading incredibly higher because of all the billions of dollars the government's been giving them. So, look, boosters will only get you so far. Not a fan of these. I don't trade many biotechs anyway, so just, I don't. CVS Health, following them. I don't know. When you look at potential futures, when you talk about recessionary environments, CVS, they'll do well. I mean, these drugstores will do well. We're talking about potentially picking up products for cheaper than they can find elsewhere. They'll do well in the future. I just, can't say necessarily right now what it looks like. Barrick Gold, baby. Nice drip. That's gold. I don't know what I'm saying. Goldan, baby. Generac following them. Do I like generators? Generac makes a mean generator, folks. And you might need to live off the grid soon, given the, it's tough with the cost of gas. I mean, shoot. But your electric bill going up too. What do you want to do? Do you need this generator? I don't know, folks. I'm so confused. Schneider Regeneron. This thing got bashed quite a while ago, but Regeneron. Don't trade many biotechs, okay? Marriott International, more experiences. I love them. Murphy Oil. Similar link to BP and Marathon, folks. I expect these earnings to be similar with all of these companies, okay? EXP World Holdings and Amon Source Bergen. After close, we have Marathon Oil, okay, baby. Uber. One thing I think worth looking at is the Uber Eats business. Obviously, that is a diversifying factor from Lyft. Now that they are starting the delivery of non-foods in the dumbest campaign ever called Uber Not Eats. I really hate that. It's probably the dumbest thing anyone's thought of in their entire lives. But look, this could be a big factor for them as people are lazy as crap. And they'd rather pay an upcharge of $9,000 for a single piece of bread than to get up and go get that bread themselves, especially given gas going up. I think this actually benefits Uber. I really think it does. So that's one thing to look at is the potential prospects for that. Etsy is one of my focus stocks too because of how it's been getting shellacked. You look at Etsy's stock down 53% in the last year. It shrank half. And really from its highs, if we're being honest with each other, down over 70% at this point. It's rough out here for Etsy. They're expected a 59-cent EPS line versus a year ago $1. So we're talking about shrinking EPS, which I believe, even at these levels, I think they might miss. We look at what Amazon did just recently, and I'm not too hopeful for this EPS line for Etsy. I really am not looking at Amazon. If they can't do it, I don't know if I trust Etsy to do it. And revenue expected to only grow 8%. This quarter, 575 against a 529 line. And you look at this, and the stock's still trading a P ratio around 30, and it's going to be lower than that once you consider this this quarter. Is this a stock that deserves to be trading at a higher multiple than most of the market? I don't think it is right now, given these numbers. Now, if they can hit on a profitability standpoint, sure, but I don't trust that this stock is long for this world here, folks. I think it's going to be a potential bloodbath come earnings time. I know it's already been getting schmammered the last 6 months, down 61%, just down 8% just off of Amazon earnings alone. There's still a lot of room to get shellacked for this stock. And it could easily, in my opinion, fall next week after these earnings fall towards $80 a share. I think it really could. And I think it's still trading at a relatively high multiple given the business if you think of the market that we're in. Then following them, we have Twilio, Energy Transfer, Marathon. Every company is named Marathon. They really are, okay? Skills, CF Industries, and APA Corporation, and Fortinet. This is my favorite game. I love playing it with the bros. I love doing the Orange Justice and cranking 90s on folks. I really love Fortnite. Oh, that's not Fortnite. Did you get the joke? You get the joke! Gosh. Thursday, before open, we've got Shopify. Again, we're talking about a stock being shellacked. Year-to-date, down 69. Ooh, it should have been 69.69, folks. Can we fall 1 more percent, please? 68.69 on the year. That's rough, man. It's rough. The stock's getting schmammered. Now, what are they expected? Expected a 99-cent EPS line. This is a company that historically has not been a very profitable company, but expected to change that tune a little bit here. This quarter, 99 cents, but it is less than they expected a year ago. Got to be considering. Got to consider that. Definitely expecting less than they did the year prior. Now, from a revenue standpoint, still expected to grow nearly 80% here. Pretty massive. $1.6 billion expected off of a $988 million line the year prior. Sales expected to grow still on the year 30+%. Pretty nice when you consider this stock now is trading at a P ratio under 20 given this year's earnings. Forward P ratio is actually going to be over 20, but a market cap of $53 billion still is relatively expensive. We're talking about a price to sales on this company somewhere around 8 times, and that's relatively expensive for some of these stocks out here right now, but on a EPS PE ratio, not trading that expensive. I still like Shopify at these levels. I really do long term. I think it's a great company for the future. I do. Crocs following them. I love my Crocs, folks. I got some Packers Crocs here. Look. Honestly, I don't know if these are Crocs brand. Nope, they definitely aren't because they don't say Crocs everywhere because Crocs brand always says Crocs everywhere. The discount Crocs are better, folks. Don't let them play you. But yeah, Crocs are big, folks. They're big. This is a cult following, unfortunately, and I've fallen in. I told myself I would never join a cult. I joined the Crocs cult, unfortunately. Then we have Penn National Gaming, one I'm highly focused on, given that I think gambling has been doing great numbers. Now, the stock's been getting shellacked. All these gambling stocks have been getting shellacked, but I think there's going to be great numbers when you bake in the Super Bowl in this quarter. I mean, there's a lot of good numbers. March Madness. This is great for Penn National Gaming. I hope you're excited. Datadog following them. These tech companies aren't made for this market right now, unfortunately. ConocoPhillips, more oil. Chemical, Royal Caribbean Group. That's right. Experiences, folks. You're going to see great demand reported on Royal Caribbean, their earnings. I'm very excited for that, and that one sounds exciting. PAM, Earthstone Energy, and then Wayfair. I'll compare them to Etsy. It's going to be a similar story. You're going to see bad margins on this one. Decreases year over year. Just saying. After close, we've got Block. Fubo TV. Too many streaming services out there, folks. And Fubo, the stock, not one I love right now, given the fact that it traded at a super high multiple for no reason. Lucid Motors. The first of the Chinese stocks, and electric vehicle stocks. This is going to be a telling point here, given all the supply chain issues that we've seen just due to China locking down everyone yet again, which does nothing, by the way. What's it going to look like for them? I don't know. Cloudflare, really great company. I do like this when we talk about internet security. I like Cloudflare. Good company. I think it's a great company for the future. Open Door, Mercado Libre. I do love a free market. I do. Then we have Wish.com, DoorDash. Don't love DoorDash, by the way. Don't love it. The upcharges, I think, too much, and I think eventually people will realize that. Virgin Galactic and Vertex. I'm not going to talk about Virgin Galactic. Not going to do it, folks. This company's not a real company. These earnings aren't important to me. They don't make money. Friday before open, we have Draftkings, similar to Penn National Gaming. Again, we're going to see great numbers, I think, out of Draftkings. I really do. EOG Resources, Goodyear. We love the tires. I got a nice set of Goodyear weather readies on the car. They're working pretty nice, folks, let me tell you. Tread depth still holding up. I like them quite a bit. Under Armour, clothing not going to fare incredibly well this year, I don't think. I don't think they are. I don't think these clothing companies are. Enbridge, Signa balls. Oh, gosh. Cinemark, AES, Fluor, and American Exile, and Manufacturing. I hope you have a great day, folks. This is it. Boy.